Hey everyone, welcome back to Crypto Cash. Thank you so much for joining me here. Hope you're having an amazing day. Happy Wednesday to you, or FOMC. It's interesting to see the charts when we got FOMC on the horizon. It always gets a little crazy leading into it, and ultimately really crazy when Jerome Powell starts giving his speech. So we will see that here in just a few hours. We're going to stream that live, so be sure to check that out. Go to our YouTube, you can find a link. We're also posting that available link on Twitter, and also, of course, to our community members as well. So just to keep in mind, we have this here available. What was it from yesterday? Just go ahead and join us live there. And obviously, if you can help us grow our Twitter community, really helpful there. Of course, join, follow, subscribe, the whole 9 yards, whatever it is that you do on Twitter, right? Because we have a tremendous amount of important fundamental and technical data, things that you can kind of really benefit from. And it's really nice to be able to kind of interact with our community members and just anyone else that is just a casual trader too. So cool thing is we're taking some healthy profits here as well. And it's been a good last 24 hours for us. That being said, let's go ahead and jump into the charts. We're going to take a look at High Block Capital and start off with some interesting data here, and then go into different type of Bitcoin charts and patterns. We do have a double top pattern right now that's forming on the 15 minute, and it's important to recognize we got that neckline that just broke, and the price is probably going to continue lower. That being said, we'll see here what's going on. FOMC causes all sorts of weird stuff. So let's highlight the positive, okay? First of all, today we don't have a tremendous amount of volume, but the day is halfway over, so nothing significant there. We can see when it comes to liquidations, last 48 hours has been fairly stagnant, minus obviously 2 days ago when we had that significant drop from 29.5 to 28.5 roughly. Okay, so a lot of short longs got liquidated there, and in truth, we got stuck with a small position size for our long. We're keeping that open because I'm confident we'll be able to get there. Hitting 30,000 I think is very realistic again. But it's just a matter of what happens here today. Okay, again, interest rates jump up, we're going to see the price come down. That's why we use small position sizes, so we can hold that trade longer if we need to. Again, these are swing trades. Day trades are coming to the community here within the next couple of weeks, but for the most part, you want to approach things a little different when it comes to that. Open interest is kind of drawing dead, nothing super significant there. The one thing I do like to see and highlight here is the global bid-ask ratio. So these are more bids than asks for the first time in a long time, okay? And typically, when you see the price action increasing, you see the amount of bids increasing as well. Okay, this is what gives me a lot of confidence here in the fact that the price should recover for Bitcoin. We could very well see a dip, but it's probably just going to be initial candle wick and then a recovery. A lot of times you'll see manipulation occur on FOMC where it shoots one direction and then instantly turns itself around to liquidate any potential position in the area. So again, be careful with your stop losses. We have kind of a loose stop loss on our only remaining trade right now, but with us having a lot more bids than asks, that's a very good sign. It shows that people feel like the bottom is in and they're trying to buy more now than they were before. It's a good sign. All right, ultimately, we also want to take a look here. Let's go ahead and go with the 7-day liquidations here. And keep in mind that liquidations, these aren't just spot, because obviously these, the price point of 32,000 hasn't been hit yet, right? So in truth, liquidations are either open positions that were previously closed that never got filled, or ones that actually did get liquidated. We can see right here at the price point of 30,000, it's a strong resistance shelf. And of course, also the same scenario here about 26.4. So we got a pretty wide range that the price is kind of fluctuating within. But if we look at smaller time frames here in the last 12 hours, we can see that there are some other positions here that are interesting to observe. So in other words, there's a lot more people closing their open position at 28,700, implying that they either A, the shorts didn't get filled, or the longs are trying to take profit. The area never got filled as well. So there's a couple of different ways you can kind of go with that, but generally speaking, that does tell us that there's more interest in the price going up than down. Furthermore, as well here with open interest, let's go ahead and take a quick look at the longs. It's important to recognize here too that the longs are underwater temporarily. Again, that's at 28.2, price at 28.5. They're not super underwater, don't get wrong, but these are the early longs here, and the late longs are also getting kind of hit hard too because they expect the price to bounce and it came down lower. Okay, so a lot of longs are hedged there at about 28.5, whereas shorts looks like they are accumulated mostly at 28.47, but also here recently at 28.3. So a lot of interest in the price coming down here too based on open interest. So again, that kind of gives us conflicting information, but it makes sense that the price would come lower first before it comes up. But again, a lot of different things can happen. So keep in mind, we got the support level here at 28,140, which was a previous resistance, right? So the price couldn't get above that level. Once it broke above soundly, it came right back down to double test. And what I mean by double test is just that we got this double top, and we're of course hitting that level finally at this point, okay? And what that really just implies is that this neckline here is broken and we're coming down, so that should prove as a new resistance level. Okay, so let's look at larger time frames to kind of see what that really does mean, because you want to be careful with too many patterns in smaller time frames. The larger the pattern, the more significant it's going to be, right? That said, let's jump right into futures. This one, actually, we have no gaps in the last 48 hours, so nothing to really talk about there, of course. When it comes to Bitcoin dominance, it's important to recognize that we keep getting rejected at 49%, and as the price comes down, alts will start to surge. Keep in mind, alts are getting hit hard right now, and they're bleeding. That's why we took 3 shorts and hit all of our profit targets, at least our initial profit targets. Some are still open from yesterday and the day before. Because Bitcoin is kind of hitting this critical point right now, where if it drops, a lot of alts are gonna kind of just drop off the face of the earth. You can see right now that we're kind of drawing dead for basically altcoin dominance, and it's, well, not just drawing dead, obviously it's coming down, but it's not going up as you would expect, right? If you saw here previously, the price did increase, or basically alts did continue to increase when Bitcoin first sold off. That's because there was a lot of extra money in the market. Now money's coming away from Bitcoin and coming away from alts, and they're stacking their tether, essentially, or their coins, right, and just waiting to be able to invest that, right? So keep in mind, a lot of this altcoin dominance, it should resurge, but it will also need to happen after we hear more about the Fed rate today. Okay, so there's a lot of little things that kind of factor in. Taking a look at this here too as well, I kind of mentioned this earlier, that with us kind of breaking below this trend line here, or this support and resistance zone of 28.5, there's a good chance we might be a little bit more bearish. Okay, now this isn't like a foolproof long-term thing where bearish going to the ground. This is just a temporary thing, but it is important and relevant to note that we were pretty much neutral between 28.5 and 30,000. Now we're slightly unneutral, if that is a word, and potentially bearish, again, being under that level. Okay, so it's important for Bitcoin to bounce right here. So again, we got higher lows on the daily. We're still in decent shape, but you got to recognize that something could happen today, which it definitely will. But cool thing is we got kind of this ascending trend that we can see here, and the price is holding above that if you count the candle wicks. Okay. Now, if you take a look at the daily on the traditional chart here, basically my chart that I have up here, you can kind of see that the trend line is getting broken. But keep in mind, this is candle bodies instead, and this is also taking into consideration the 50-day simple moving average. Okay, so if you can kind of see this guy here, the orange line, it is kind of moving right within this trend line here, and it's common for the 50-day simple moving average to be a trend setter. The 20 is the first one, and then the 50 is to follow. 50 is a little bit more of a support and resistance level, so closing below that today would be disadvantageous. Closing above would be much better. I would like to see a closure about 28.5 or higher today to be able to have a chance to continue to ascend, if you will. Okay, so that's kind of what we're looking for. Now, big picture, we've already looked at the monthly here recently and addressed that the monthly is essentially in pretty good shape. We're above the RSI at 50 for a change. We're also having a convergence on the horizon. That's positive. And when it comes to a convergence here today, we don't see that just yet, even though 2 days ago it gave us a glaringly obvious sign that it wanted to go higher, but the whales had a bit of a different story to tell. They weren't ready for it to go higher. And that's okay. That's the way it goes sometimes. Key takeaway here is that we're trending above and below 50 on the RSI. So a good sound closure above 50 on the RSI would be great. That's why today closing at 25 would put us or keep us above that level. When we waver really, really close to that point, it's a case in point where you kind of want to stay on the sidelines and not really do too much. That said, it's not a bad thing. Same with stochastic here. Nothing too much to really know, even though we are diverging. There is potential here for further downside. So generally speaking, even though we have some positive here, until the candlestick closes, we don't know what we're going to see, but there are a small handful of signs that show us that the price action should and could continue lower. But we need to recognize that there's a few other signs too that are positive. So let's go ahead and take a look at potentially some positive signs here as well. Because we look at the 4-hour, we are still establishing higher lows. Okay, so that's important to recognize. It's not fantastic. These are some aggressive candle wicks, but we can see this level here at 28,140, 130, holding fairly strong. Okay, so again, first attempt, unsuccessful. We'll see if it continues. Keep in mind, we're going to see some sporadic behavior here in the next 2 or 3 hours. That being said, though, we are below 50 on the RSI on the 4-hour, and we also have a MACD potential divergence. This is more disadvantageous as well, including the fact that stochastic is also planning to turn itself around. So we basically have a lot of bearish activity here in the 4-hour. There's no reason why the price action wouldn't continue lower based on what we see here so far. We are below all 3 moving averages too, so really in most cases we should expect further downside. It'd be naive not to. Now, however, there are, again, some positive signs depending on how you look at them too. If we look at the hourly, we can see we are overextended here on stochastics, and we can also address, and let's see here as well, if I'm not mistaken, we are at a 6. We've got another 3 hours of potential continuation down before the next leg up. Okay, now keep in mind, it could go sideways too. That's what I'm hoping for and expecting the price to continue up from here, because once again, we have these higher lows here. And of course, even though we have a double top, this could very well work itself into an ascending type of wedge where the price would inevitably break to the upside. Okay, so I think there is some positivity in the smaller time frames, but we got to recognize that the larger, basically the 4 hour and the daily, are giving us slightly more bearish divergences, if you will, and it's best to anticipate the price coming down before it comes up. Okay, but that being said, if this hourly can continue to ascend, we might see better situations or a better potential increase here. But again, a lot of it is depending on the market today and the FOMC. So we do cover a lot of that stuff here. So of course, if you want to watch our live stream here in a couple of hours, it'd be great. So you can kind of, well, not only watch the charts live, but more importantly, understand kind of the fundamentals going into it, because we have some really good analysts on our team that are able to identify that too. I'm more of a technical head. I like the technical charts personally. But once again, what we see here on the hourly is a potential bounce off support here at 28,130. I do expect that to hold initially, but once again, we've wicked down 3 or 4 times so far and haven't bounced significantly yet. But FOMC is on the horizon. There's a lot of buts here today, including, I'll keep that to myself. All right, so last thing, of course, is the Ichimoku cloud. This is something that also is potentially bearish. Now, keep this in mind. I say potential because we haven't officially closed yet, but closing steadily below the cloud would be disadvantageous because it would kind of prove that we have, the potential of that upside here is lower because there's a resistance level here, okay? So again, another thing that's kind of stacking the cards against us. Overall, technically, we are a little bit bearish here on this sign, but we have to see how the FOMC reacts first. So I do recommend kind of staying on the sidelines, waiting for a direction to establish itself first by waiting a couple of hours after FOMC. My guess is we're going to see some ugly candle wicks, and then it's going to inevitably naturalize to the upside if potential, if there's nothing crazy. We're once again, 0.25 is the expectation. If it's higher than that, we can expect downside. If it's neutral or lower, then there's a great chance we'll see the price continue higher. All right, well, hopefully that was beneficial for you. I'm so sorry if there's a lot of conflicting information. Sometimes, technical analysis is not a perfect situation or perfect science, but we do have some ascending qualities here, some positivity in the overall sense of things. I think that the smaller timeframes are looking beneficial, but we really just need to wait and see what happens today with the FOMC and how the market movers decide they want to move the market. Remember, we don't control the market. We're just this little fish in the big pond, and we're just swimming with the whales and seeing if we can kind of attach ourselves to get what we need out of it, right? So right now we got to wait for them to establish the trend. And right now, so far, the trend is telling us it wants to come down, but it could very well change. We have some positive news here today. Good luck, be careful, be safe. Recommend staying on the sidelines until things actually happen and an established direction is in, okay? Thanks again for joining me here. Hope you have a great rest of the day. We'll see you in the next one.